Thank you very much indeed, Chris, and the panelists on that last discussion. We are going to need about 2 minutes, just as we get the final panelists in this session mic'd up. So you've got 2 minutes maybe to check out the Affinity app, perhaps, or catch up on your emails, but do bear with us. It won't be any more than a couple of minutes. Thanks very much indeed. Right, just the final session, or the final discussion, panelist discussion in this session before we can all break for lunch, which is scheduled to be at 1:15. This session is basically how can we harness Africa's economic growth prospects via the financial services sector. This discussion is going to be moderated by Abhishek Agrawal. Abhishek, thank you. Just a quick introduction on Abhishek. Abhishek is the managing partner for Accion Digital Transformation Fund, based out of Mumbai in India. In his earlier roles, he was Chief Regional Officer for Accion in Asia, in the Asia region. Abhishek has served on numerous boards and currently serves on the board of Annapura, Business Planning and Microfinance Operations. Abhishek has made several investments and exits in financial inclusion for Accion, as well as likes to work with entrepreneurs in taking companies to scale. In earlier roles, he's worked for Finca as CFO, and before that acted as the advisor to the Institute of Chartered Accountants. Abhishek is a social change maker and an aspiring fellow. He has a PhD and also is a member of the Institute, a fellow of the Institute of Chartered Accountants. He's very passionate about digital finance and MSME inclusion. Abhishek, over to you. Thank you, sir.
Thank you very much for the day.
Thank you very much.
But thank you, really appreciate it. My fellow panelists, would you like to join us here?
Ayman, do you want to?
Maybe you want to move here so that, perfect. Thank you very much, everyone. Very good noon, good afternoon. I think this is the session just before the lunch, so we promise we will try to make it as entertaining as possible for all of you. Let me do a quick round of introduction. This is a very distinguished panel. We have the investors and the practitioners both, so that we can bring in some real knowledge, some real experiences coming out of the field from the investing as well as execution both. So I have lady going here first with the lady on my extreme left is Ruby. Ruby has been an investor. She's the managing partner for Greenhouse Capital and has been a consultant in the digital transformation space for a very long time. Welcome, Ruby, on the panel.
Thank you.
Then I would like to introduce you to Tarek. Tarek has been a serial entrepreneur and has started his bank in Ghana with the name called Affinity. Welcome, Tarek, on the group. Then Lucky on the other side is again a serial entrepreneur. He is running his company as a Lucky Financials, who's doing the B2B, B2C financing in the Egyptian and Moroccan market. Thank you very much. This is a pleasure to be with all of you. We are looking here for some good and interesting stuff. I think I was introduced as a quick round of introduction here from all of us, what we are doing. A quick one about me. I am from Accion, runs a fund called Accion Digital Transformation Fund. And while Accion has been in this financial inclusion space for the last 60 years, very recently, for last 4 years, we have picked up the specific theme and thesis as Accion called Accion Digital Transformation. And effectively what we are doing from this theme basis, given our experience over so many decades, we saw that the fintechs have evolved and have proven themselves into the market on both execution as well as capital side both, but the traditional companies who have been out there into the market have been struggling a little bit on the customer engagement on the digital transformation. So lately our focus has been how we can help the companies across the globe on digital transformation by deploying the capital as well as helping these companies on being more and more digitally transformed on the customer engagement side. When we say digital transformation, that doesn't necessarily mean the process efficiencies or putting the new core banking system. What we are really looking at, how we can help the institutions to really connect with the customer. And in that connect, giving the comfort, letting them understand how the migration can happen over a period of time to the technology. So we have been, given this, the new theme and thesis of the digital transformation, looking at these companies with the capital as well as the advisory side of it. That's a little bit about me. I would request my panelists to give a quick introduction about each one of them, what their business models are, so that we can get a little bit more oriented before we deeper dive into these specific questions. And can we start with you?
Great, thank you, Abhishek.
Yes.
I don't know if you guys can hear me, right. My name is Tarek Mouganie. I'm Ghanaian British, and I'm the founder of Affinity, a digital bank based out in Ghana. I grew up in Kumasi, moved actually to the UK at the age of 12, studied here, and returned back to Ghana 10 years ago because I became obsessed with supporting SMEs. And that was the core of what Affinity was created to do after spending about 10 years here investing in banks. Affinity was born out of a need that our continent faces, which is providing affordable financial services, bank accounts and loans, to a segment of the market that's largely ignored. So 60% of adults don't have bank accounts, and less than 10% of businesses have access to credit. Supporting MSMEs is very important, as you guys will know, and I'm sure we're going to go into it a bit more later on, so I don't want to reveal everything right now, in terms of socioeconomic development and growth. So it's very, very, very important. There's a huge lending gap in our part of the world, and we were created basically to service that lending gap, that banking gap. We have been building for about 4.5 years. We got our banking license last March, so we're the first grant this November in 10 years to get a license in Ghana, so it's been that was a huge win for us. We launched on the 26th of October, 2022. I know all my dates of when all my team members joined and when our products were launched. And since then, with no marketing spend, we've acquired 30,000 customers. 90% of our customers were their first ever bank account. We've helped our customers save $26 million. We've given out about $12 million worth of loans as well too. And over 60% of our customers are women, which is something we're very, very proud about as well. We are also very lucky to enjoy an NPL of only 0.5%. No one believes me, but if you sign my NDA, I'll give you access to data room. And on top of that as well too, we enjoy a NIM of about 35%. So we're expanding in Ghana. We just closed off a fundraise, and then eventually the plan is to become a Pan-African bank in Sub-Saharan Africa, ex-South Africa. Thank you.
That's fascinating. Those were some very good numbers. I think saying 60% women focused on the MSMEs, which is not often we see in the other markets. So we'll get there, but Ruby, to you.
Yeah, I don't know if you can hear me, but I'll try and project. So I'm Ruby. I'm one of the partners at Greenhouse Capital. We are effectively a venture capital fund based across the continent, actually, and also the Middle East. But a little backstory, we've actually been builders on the continent for about 15 years. So my partners and I, we've been building or venture building in Nigeria, predominantly payments companies and payments processing companies. So my partners came back to the continent. They realized that in order to kind of build and start developing any market, you need to start with payments infrastructure. And so they basically took sectorial problems. So say transportation, specifically intercity, the aviation sector, education, and so on and so forth, utility payments and so on, and then built verticalized payment solutions to connect all of the players within that. Through that, we fell into investing. And so early days, we saw a lot of those sort of first generation of entrepreneurs, your Flutterwaves, your Amigos, your Helium Healths, your all of the sort of Nigerian kind of heavyweights. A lot of them would sit in our offices, they'd kind of navigate how to acquire customers, acquire banking licenses, and a lot of that we'd had assets within our existing businesses already. So what that looked like was, hey, you could come in, you could lean on our license, you could test the market, test your idea, and then go launch into the market. So it was sort of a soft landing as a venture builder, but also inevitably, because of the lack of capital that existed in the region 7 years ago, what we found is we ended up investing and deploying a lot of our own money. Fast forward to today, we have deployed a lot of our own capital to date, but also in the midst of now opening up our sort of fund for broader investors. And we deployed across about 70 companies. All of them are B2B focused. And obviously everything can kind of inevitably fit into the fintech bucket, so to speak. But one of the biggest kind of areas of our thesis is, are the companies building the infrastructure and the pipes that digitize Africa, or are they filling a gap? And so that is where we end up really thinking through the sort of the transition between offline and online. How do you bring hospitals online? How do you embed financial services? How do you embed insurance? How do you eventually go B2B2C? And so that's kind of how we kind of look at a lot of our investments. And then personally, as Abhishek said, I'm Australian. Sorry for the accent if you don't understand it. But I'm actually Indian as well. And so grew up kind of moving around and just saw the blueprints of what happened in China, what's happening now in India, and could really start connecting the dots to see what can really happen in our region and in Africa. So that's me.
No, thank you very much, Ruby. That's fascinating. I think you being the venture capital investor, but I think as we were just talking about it, you have that operator experience, which very few have in the market, having the operator experience, helping the institutions, helping the entrepreneurs to what it really takes to build them. It's great. And also hearing about it, how you have been focusing on using the digitals and building up the scale by use of technology is fascinating. So we'll come over there in some time, but Ayman, to you. What's happening at Lucky? Give us a little bit more insight.
Sure. So my name is Ayman. I'm here representing Lucky Financial, which is my second company. Our first company was started in 2012. It's called D-Squares. It's currently one of the leading loyalty providers, enterprise loyalty providers in the region, Middle East and Africa, operating in 8 markets. Africa on its own, we have Egypt, Kenya, Tanzania, Morocco, and Tunisia. So basically, D-Squares, we provide loyalty, end-to-end loyalty solutions, starts from technology to a managed service, end-to-end solutions for enterprises, basically Fortune 500 companies, including telecos, banks, FMCGs, oil and gas companies as well. We've started D-Squares 2012. Across our journey in 2018, we figured out that we need to move on basically with solving for a big opportunity in our region, especially in Egypt, which is basically providing credit to the underbanked population. In our region, we have one of the highest percentages for unbanked and underbanked consumers. So we've decided to leverage the assets that we have built on the B2B side and start our B2C consumer brand, which is Lucky One. Through Lucky One, basically, it's basically a challenger bank or a neobank that comes out of Egypt, currently operating in Egypt and Morocco. We started from where we ended in our first business, the B2B side, which is leveraging the assets of the largest merchants network in the region, providing saving products, so a bundle of discounts, cashbacks, through closed-loop wallets in the very beginning. And then in 2022, we got our first license from the central bank, from the regulator, and we became one of the issuers, card issuers basically, and banking our existing consumers and becoming able to provide credit. How do we do that? Because of the amount of data that we have collected basically throughout the years in the very beginning. So at this point, Lucky is a card issuer that provide basically instant credit approvals through advanced data models. We have landed in the past 4.5 years, 12 million customers outside of Egypt. That represents almost 50% of the underbanked population that we are targeting, which is the middle segment out of Egypt. We have around 2 million active customers on a monthly basis. We banked 300,000 out of those, so those are lucky card holders throughout the past year in specific. So we're extending credit to around a quarter of those that gets approved. We're talking about credit tenors of 3 to 6 months. So it's a kind of a hybrid credit card that works for prepaid and credit instead of a longer term kind of tenors. Recently, we've established as well our third company, just a few months back, capitalized as well, and it's a B2B2C card issuer. So it's what we call the banking as a service that provide managed services in addition to card issuance as well.
No, thank you very much, Ayman. This is fascinating. I think the type of scale and the size and the serial entrepreneurship which you have mentioned and shared with us. I think we are looking forward to learn more and more here in this conversation. I think and again, the focus of the panel is really looking at economic growth prospects via the financial services sector. And when we are talking about the economic growth, the pillars of the economic growth in any market is always the informal economy and the economy through the MSMEs and SMEs. And as we just heard from our panelists talking about the MSMEs, how they are supporting, whether it is through the B2B or to the B2C, I would like to take a little bit of a deeper dive in that segment. And since these are the backbones, how do you see the challenges in funding these? I would ask Tarek, you as well as Ayman, both of you on this question, that what are the key challenges you see in the MSME financing and in the markets, whether we talk the markets of Asia or we talk the markets of Africa? There's a lot of informal economy out there, and particularly when you are dealing with these MSMEs, it gets very hard for the lenders to validate the data, create the footprints on it. A lot of business happens in cash, and whereas both of you are coming from the digital footprints side of it. So share a little bit more light for us on the MSME lending side, starting with you, Tarek.
Sure, thank you, Abhishek. So just to give some context, because the numbers are quite staggering. So the population of Africa, as we know, is 1.1 billion at the moment, and 60% are under the age of 24. It's projected that in 2050, it's going to be 2.3 billion. And if things don't change, 86% of the world's poor will actually live on our continent. So job creation is something that's incredibly important, and SMEs are the drivers of socioeconomic growth. That's a fact. So we're sitting here in the UK. The UK is going through a very difficult time, yet 60% of individuals are employed through an SME. 99.9% of private businesses are SMEs. 47% of government revenue in this country came from SMEs as well, too. I'm not going to give you the stats in Africa because most of the times they don't exist since the informal sector is there. And as a result, it's not fully transparent, but almost 80% of businesses are said to be unregistered, don't pay taxes, employment is really scarce, huge issues, right? I'm leading to what we do at Affinity and how we're solving that issue. Over the last sort of 10 years plus, there have been some amazing inventions that have popped over, microfinance being one of them, groundbreaking, really quite incredible. On top of that as well, too, digital lending. The biggest problem that still hasn't been cracked is actually growth capital to these SMEs. So at the moment, if I'm a registered or unregistered business in Africa, and I wanted to borrow to grow my business, I have a number of options. First, friends and family. That's where they tend to depend on raising capital. Second, microfinance institutions. So these are very much short-term, high interest rate loans. And then the second as well, too, is digital lenders. What we basically created at Affinity is the first product for SMEs in Ghana that's actually growth capital. So we've been lending at, to begin with, $1,500 a pop. Our average loan size at the moment is at $6,500, and our tenure is up to 2 years. And what we're seeing basically now are these small businesses borrowing from us to invest in their business. So we're not talking about working capital where you're borrowing to finance, goods or produce or whatever. You're talking about borrowing from us basically to invest in your business. So whether it's acquiring machinery to increase your output, or if it's to expand your business, you're investing in your business. And we've seen a 6-fold increase in employment of our SMEs on our platform, which is astronomical. So just imagine now that then changes, not just creating job opportunities and employment, but on top of that, trying to formalize these micro-enterprises or basically encouraging them into the formal segment of the market where they're providing revenue streams for our very fragile economies. Imagine the impact over time that it could have basically on the continent.
Absolutely, could not have agreed more. And just to share a little bit more light, that how are you really underwriting these customers?
So, very good question.
Before I go to
yes. Two things. It's not rocket science. I know it sounds crazy. So the first thing is you can only lend long term if you're affordable, right? If your interest rates are 10 to 16%, which is what most digital lenders do, you can borrow. You can issue out a loan for 7 days, 14 days, 21 days, which is fantastic. I'm borrowing $100 worth of tomatoes to buy $100 worth of tomatoes. I own 10% at the end of the month. I'm going to sell them for 120. Within a week, I can ship those goods. Right? I mean, that's typical microfinance. Digital lending has kind of digitized that, but it's still kind of the same sort of idea. In order for us to be able to extend a line of credit to that individual, we have to reduce our interest rates, so that becomes growth capital, so it's long term. For that to happen, you have to manage your cost of funding. You have to manage your cost of operations, digital bank. And then the third thing, as you rightly point out, it's your cost of risk, not just credit risk, but operational risk. Now, I'll let you in on a secret. I mentioned earlier on that 90% of our customers were their first bank account. That's basically how you do it. We own the customer. So you open an account with us. We have data on your savings. We are your primary bank account. We know how much you earn. Our average customer saves with us 5 times a month. We get 11 inflows per customer for 1 outflow. Now think about it. You guys here who are earning a salary, you have 1 inflow a month in your bank account, and you have, I'm sure, hundreds of outflows, right? Depending on how extravagant your lifestyle is. Our customers are the opposite, and we're collecting data on this segment of the market. We have proprietary information on them, and that's what we use on underwriting. It starts from that, and then putting an additional overlay of affordability to that too.
Well, thank you very much for sharing that insight and how you are using the data as well as the transactions which are happening and building on it. Ayman, to you, how are you lending to your customers, MSME segment particularly? Share a little bit more light there before I probe on the underwriting side of it.
Yeah, but a lot of insights actually from Tarek's feedback as well. Would like to touch base on that. So I think looking at Africa in specific, since it's the headline for the topic. So we need to look at Africa as not as one. There are different value proposition that works in some areas that doesn't work in others. And I would say it's probably the case all over the place. So what works in the north doesn't work in the west, and rarely if that is actually extended to and it worked in the same way. So I think answering the very first question about access to funding, I think tackling the right value proposition for each market is what makes things work in the very beginning. So understanding the local market, understanding the challenges, and making sure you're tackling them in an executable way. Because there are a lot of good ideas, there are a lot of actually insights, numbers about each market, but the way execution happens in each market, it's completely different. And maybe coming from a B2B background in the beginning, and getting into this B2C helped us a lot in the way we are looking at the consumer base. So in our first company, we used to operate 5 different African markets, and it was pretty clear that this cannot be actually a B2C model across all markets. So we've chosen the market, which possibly comes out of our headquarters in Egypt to become the starting point, and then we decided that Morocco would be the nearest to, in terms of the value proposition and the mindset and tackling the problems for the underbanked population. So underbanked population in general, the main issue is access to data, similar to any other market. And when you try to tackle access to data, you need to collect those data from basically parallel channels. So you don't get into the banking system to collect data because it wouldn't work. If it worked, they have actually banks, traditional banks that should have done it. But it's not there. So you find like 5 to 10% out of the region, I'm talking about North Africa in specific, that's in the best case scenario, those that you can have bankable data points about your consumers. So parallel data comes in our situation with providing actually the needs of these markets. Back then when we started in our core market in Egypt, it was the devaluation, 2017, 2018, one of the first big devaluations that took place. And by devaluation, basically inflation happens, and accordingly, the consumer starts looking for saving products. So you start with savings, providing them with discounts, kind of marketplaces and cashbacks. And with that, you acquire more customers easier and more efficiently. This is how we thought about it. And with those acquisitions, you start actually monitoring the consumer behavior more and more. And by monitoring this consumer behavior, you collect more and more data. And this is how we've built it. So we acquired a large number of consumers in the very early years, and then we moved basically to credit a couple of years post-launch. And you need to build everything in-house. You need to build everything from scratch. This is how it works in Africa, and this is the only way basically to pave the way and move on. Maybe the lending side could happen in different ways, but it's very important that you build what's right for the market, what's localized for the market you're operating.
But you touched upon that your product is really the credit product and issued on the card, which I'm assuming that it's a short-term credit product. And often the banks and the traditional financial institutions have faced it challenging to survive on those credit cards because it is often high default segment and not enough money to be made in this. So what has been the path breaking for you, given the numbers which you were mentioned, but it's staggering numbers?
Yeah, I think it's mass.
And you have two investors sitting here.
Yeah. So I think it's the mass targeting. The small ticket sizes works only for mass population and with an automated solution. So you need to have a seamless consumer experience. Whether this consumer is an SME or an end user, it needs to be a seamless experience. The onboarding needs to happen very properly, needs to be streamlined across the rest of the operations, otherwise you won't be able to scale. So I think this is where the traditional banks actually try to avoid, and it makes perfect sense for me. They don't have to get into this. They are profitable, they are making money from a certain number of customers, and they cannot go 100x the size of customer base they are working with. So I think it's basically how to build the right technology that caters for the needs of the market, and then it paves the way for mass. So this is how we thought about it from the early years of the company. Start with actually bringing the mass on board, and then which is the marketplace, acquire the customers, then go for the credit.
Right. No, thank you very much for that. And Ruby, coming to you, given your role as venture capitalist as well as the operator role back in the day, how do you see the MSMEs in both? And I'm broadening the question a little bit because you have seen various sectors. I think you mentioned about healthcare, the agri, and others. So how mixing on both sides, MSMEs as well as on the financial services side, if you look at it, the contribution to the economy, and how would you be comfortable in looking at this from the MSME exposures? What is the growth opportunities really there?
Yeah.
Yeah.
You know, I think it's actually a really interesting question. I think our thesis internally has almost developed in a way that sort of says, very similar to you guys, digitize the SME, create stickiness within your business model, and then start layering in financial services versus offer a digital banking product upfront, neobank, a Monzo, or Revolut, or whatever. The level of kind of work that needs to be done to onboard these SMEs or these individuals, the stickiness doesn't really exist. The ability to monetize that individual is really, really tough. You're fundamentally competing with cash, which is quite difficult. So there needs to be something more that keeps the SME within the ecosystem. And I think generally speaking, today, maybe this is a little bit, I think there are a lot of people who would disagree, but I think that going through a pure technology angle actually doesn't quite make sense, at least in our markets today where we are. I think what needs to happen is to say, how do you digitize a brick and mortar, right? Mm-hmm. Whether it's a hospital, whether it's the small kind of, small store on the corner of the street that's selling bread and basics and flour and wheat and whatever. How do you digitize them? How do you add value and create, be able to get access to the data that doesn't exist? The reason a lot of these Monzos and Revoluts have been able to thrive is also because there's access to further data, right? You can tap into your kind of credit scoring. You can tap into other pieces of information that are already online for a consumer. You're kind of starting way, 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 way back, right? So really what I think is actually once you start getting sort of a very, niche or focused, or you've got the attention of a particular ecosystem, and you're now layering in a whole host of different services. Take SMEs, can you do basic bookkeeping, right? Every SME in India 25 years ago had literally a physical book. They drew a ruler, they took a ruler and drew the sort of ingoing and outgoings into like the end of the day kind of ledger keeping. And there's a company that's now digitized that, right? And so when they can start doing that seamlessly and you're seeing kind of them save money or add revenue or add some kind of value to them, they're now actually way, way more loyal. And inevitably, they're expecting you to now offer financial services, right? They're inevitably asking for wallets or digital payments or lending for working capital or whatever it is, right? Or insurance for their products, digitally bringing in kind of logistics and supply chain, being able to order their inventory online through the same sorts of cohesive kind of ecosystems. And whatever part of that ecosystem you build, you're still finding that they're actually much more loyal, right? And the challenge is that you need loyalty when you have scale, right? So you can't indefinitely have, massive volume with small margins. That volume needs to somehow keep coming back. Otherwise, you're continually looking for new customers to acquire, right? And so I think this is the only way in our markets that you can do that. And then the other layer I would say is there's so much education that needs to be done around this, right? Cash is tangible and I can see it and I can put it in my pocket. Doing a lot of this stuff, there's a level of education. So I think that's kind of how we've been thinking about it. And so when you kind of extrapolate that into MSMEs, when you extrapolate that into small educational systems, like a school, right? Can you actually bring the school online? Can you offer digital payments online? Can you then offer, remittances to be paying for school education, for example, and plugging in, someone that maybe you've got an auntie or an uncle, or you've got kind of your niece or nephew in India and Africa and wherever, and you're paying for their education, can you do that directly to the school, for example? So a lot of that is sort of digitizing offline, and that's really where I think the next few years will go. And that's where I think actually a lot of the larger, I guess, more traditional businesses and corporates will need to start moving or partnering with, right?
No, that's so interesting, Ruby. I think the point you make on the ecosystem evolution and tech and touch, I think often what at least I have found is that the financial services providers continue to look at with the lens of financial services deliveries only. And I think the example which you used, how the MSMEs can be helped on their bookkeeping. And again, around the world, I think now there are numerous models with the use of technology coming. And what it means really is that you are engaging with your customer more and more. And the more you engage with your customer is the revenue from that customer, rather than driving it just a volume-based business or going out for big numbers. If you are able to have a high stickiness, then the revenue from that customer, which is more of a telco language, Rupa, is going to get increased higher. And that's effectively, I think you do not want that customer to be lost to your competition or to somebody. At the same time, customer really looks at you always, but if you are not able to meet their demands or their aspirations, that's where some of these starts to happen. And we have seen it. Actually, even in traditional microfinance institutions, generally, if you are a group lender, then you just continue to give them a group lending long-term product. And as you are working, even if you are giving them the product for their income generating purposes, your needs keeps on changing. So while you are giving them a 1 year or a 2 year term loan product, why can't you give them a 15 days or a 30 days, a short-term working loan, like what you were talking about, maybe giving a card or giving a wallet-based or a phone-based small credit, which can be repaid. And that's something which we have done with our partner in India, called one of the microfinance institution, has been having 2.3 million customers, close to 1 billion assets under management, and have been very traditional. So that's where I think as you start becoming more and more open and look at tech and touch both, you really solve the problem for your customers, be more engaged and then being more effective.
I think the one thing that that is really important here is just you almost are forced to do it, right? Because you need to get access to credit scoring. You need some data to even understand the viability of lending to this particular business. And to your point, you're not lending to 100% of your consumer base or your 100% of your MSME base. You're lending to maybe 10, 20%, maximum 30%, the great businesses that can afford to pay back. The problem is that you only have such a small amount of data, which is what are your inflows and outflows fundamentally when you start. And even that is hard to track because there's so much fluctuation in who they sell to, seasonality. I mean, there's just so many things that factor in. And you almost have to bring it down to a smaller scale. Like within a neighborhood, if you have one store and 3 other stores open up, you're now seeing, as a lender, you're seeing kind of all this volatility. Why have these things changed, right? Because actually there's other people now opening up similar products, or, you know, or like Coca-Cola has a bunch of agents that have now said, hey, sell Coca-Cola, right? And now every store on the street has that product. So I think the point is that you almost are forced to build in the inventory management, the inventory purchasing and manufacturing, the sort of B2B commerce piece. You're forced to either look at other means of getting credit data before you're comfortable even lending, right? And the other piece that I would say is, a lot of these SMEs, they're operating pretty good businesses. Like, they're not tech businesses where we are thinking about growth at all costs, running your valuation on GMV, like none of this fluffy stuff, right? It is literally saying, I make this much money, these are my costs, which will always remain below the amount of revenue that comes in, right? And I will always remain profitable because I need to feed myself, right? Or I need to be able to sustain a lifestyle. This is my core business. So you're moving into you actually have very sustainable businesses. So actually it's less so about kind of putting in too much fancy technology and more around what are the pieces of data that you can actually gather that are the most valuable?
Basics.
Where's your leverage? Yeah.
The basics. Yeah.
The basics.
Yeah.
Yeah.
You wanted to add something? I think I noticed you were wanting to.
I just wanted to comment because you're spot on, because by doing stuff like Ruby is mentioning, you're actually also improving the creditworthiness, which is something that was very important that I wanted to point out.
Yeah. Given Ruby touched upon on the GMV and the valuation part of it, I want to come back to both of you as in your entrepreneurial role. In terms of, given we as an investor, and I will include myself as well in that bucket, we keep on hearing a number of times that Africa is a challenging market. Investing is hard in the, I think we need to change that narrative a little bit rather than calling it Africa as a hard market. We need to find more and more opportunity, and I think responsibility lies on both sides. But how, for both of you as an entrepreneur, and you have done some good successful fundraising, how hard or easy it has been for you to raise this money, some experiences to be shared there?
You'll probably have better experience. Why don't you start with the good before you go to the bad?
Go ahead with the good one then.
No, I believe it's, of course the timing is makes a big difference. The macro status is key to answer this question. So, and it depends on the investor, how he's looking at the region at this point. I believe no one is actually doubting the opportunity and the potential of the region, whether north, east, or west, as the upcoming markets. On the north, since we've been focused on north for some time and lucky, it has been a great previous 2 to 3 years with a great actually attraction of VCs from all over I would say all over the world. We got, in our previous round in 2022, we got investors from the US, from Europe, and from the region, of course. So it has been an attractive phase. Of course, there are the ups and downs in each market, and that comes with stability. Whenever you reach the point of stability and the vision is clear, regardless of the status, the economical status of each market, it becomes much more, or once more basically attractive to the investors. Investors are looking for the right timing. I don't think there are any doubts about the markets. So I believe it's the timing that makes a difference. So everyone wants to buy at a cheap price, wants to come in at a cheap price. And it's basically how you can show that the inflection point of this business compared to the investment round you're in, whether it's a Series A, it's a seed stage, or a later stage, is coming at the right timing for this investor. I believe from what we have seen in the past 6 years doing fundraising that there is always the right investor. You just need to intersect with the right investor at the right timing. Those who has a mandate basically for the African markets are step one. Second step is those who are actually willing to come in an instability phase to actually get the best out of that at a later stage, probably more of the seed and early stage kind of investors. So I think finding the right investor that is looking at the same stage you're in is, with a belief, of course, in the region, is key to lead at least the fundraising rounds.
Yeah, no, thank you very much. That's pretty useful. Your stake?
I have a slightly different story because we're a bank and there's a chicken or egg situation there, right? I mean, investors want traction to give you money, but you can't get traction until you have a license. To have a license, you need money, right? And so it's a bit more of a complicated situation, but I was very, very lucky. I had a house here, I sold it, and that's how I started the business. I ended up buying a microfinance business, so I took a lot of risk on myself. It's been very difficult. I spoke to a friend of mine this morning who runs a startup in the US, and he was moaning, and I just sat there looking at him going, you have it easy, man, because number one, you're in the US. Number two, you're not in a regulated space. Whereas with us, we are on a difficult continent where cycles are shorter. I'm in a very highly regulated space, so it's not a payments license, it's a deposit collecting financial institution, which makes it even more difficult. And I'm in a particularly toxic country, Ghana, when it comes to Africa. The good news, though, is that once you survive cycles, which we have, it proves your business model. So that's the positive thing. I mean, I'm highly optimistic about our business. Things are actually, knock on wood, going well, believe it or not. It's not surprising when you're building an affordable product in a country where people can't afford much. And then the second thing I wanted to say, we just closed a fundraise 2 weeks ago. It was really interesting speaking to investors because I've seen a shift of sentiment away from customer acquisition, which you kind of alluded to, into profitability. And with a high margin business like ours, where we're projected to break even in the next 10 months, it resonated a lot more with the current cohort of investors that we've been speaking to.
Fantastic. No, I wish this conference is more successful for both of you, given you have two investors sitting on this with you, and there are many more out there, so you are able to strike the conversations, which I'm sure. And before I go, one of my final question, let me just check with the audience because there is a time check as well. If there are any questions from the audience, otherwise I will ask a question on my own, which is, any questions from the audience? Yeah. So quickly, I think we all have been following, and this is given I come from India. India has been part of G20. We were hosting the presidency, and now the presidency is shifting to Brazil. And fortunately, and very very well, good job being done that Africa is now part of the G20. So how are you looking at that? What quick keywords on it? What could be the opportunity for us as a financial services sector to reflect upon that this is how we can lap up the opportunity in the G20 group from an Africa perspective within the financial services sector? Any quick words from three of you?
Okay.
I
think for me it's on the sort of agenda. I think we need to find a way to do better on cross-border trade. Like we as a continent just don't trade enough internally with each other, so payments and cross-border trade. I think the other piece is we need to really put things like regulation and finding a way to do, to just be a little tighter on, intercontinental regulation, right? I think the reason we have such a challenging capital environment is because people are scared, right? They're fundamentally nervous about investing in a region that is not always as well regulated. And so I think the question is, how do you promote technology participation, corporate participation, and government participation to make sure that this becomes a really enabling environment for capital providers versus something that is a bit of a nice to have or part of our mandate, therefore we're doing that, right? That's what's going to create a much deeper liquidity base overall.
No, thank you very much, Rubina. This is what I see, bring the experience from India. I think what we have seen, how India has invested on the digital infrastructure, creating the railroads for the economy, and that has changed the game. Yeah. So could not have agreed more with you on the regulation as well as creating that digital good public infrastructure side of it. Yeah. Tarek, your take?
Thank you. I was also going to say that it's time for brand Africa to shine, frankly. I mean, I guess in this case, Africa is a country since it's the AU that's on this platform. But I mean, taking a look at the sector we're talking about, banking, it's the most profitable sector in the world. Yeah. And it's the most underpenetrated in the world is actually Africa. There are huge economic opportunities. These hurdles that we talk about are actually investment opportunities. So the one thing that I would hope for is over the next few years that the image and the brand that we have as an uninvestable continent is those perceptions are changed.
Absolutely. Could not have agreed again. I think given the type of economic opportunities and how the GDP in this part of the region has been growing is just fascinating, and what it brings to the global economy from that prospects perspective. Yes, absolutely.
Yeah, I'll just build on what my colleagues said here. I think it's how to execute on that front differently at least once when it comes to the continent. So taking it from the government level to the private sector. I wouldn't include here the early stage companies, startups and so on, but I would take, it's time for the private sector to take over on the execution side from such an event, to take it and show to the world basically that there are great success stories out of this continent. And I think that those are actually the ones that needs to step up, that came from within the continent, needs to step up and show that what they have done in the previous decades maybe. So I think it's more showcases, more success stories coming out of the continent to try to make this more tangible to the rest of the world.
Absolutely. No, thank you very much. This has been a wonderful conversation with all of you. I hope you all enjoyed the conversation as well. And with that, I can end the session and we all can head towards the lunch.
Thank you.
Thank you very much.